Hello and welcome to Ticker Tapes. It's Wednesday, which means it's time for a look at the crypto space. Bitcoin entered the second half of the year in a pretty sorry state, having lost some 54% of its value by the end of June. On the plus side, though it dipped back below $20,000 per coin, this week, Bitcoin is 12.8% above the recent low posted on the 20th of June. That suggested we may have entered a period of relative price stability in the cryptocurrency. Analysis from Glassnode suggests that all Bitcoin tourists, or loosely affiliated investors, have left the market, thanks partly to the recent sharp drop in price, leaving only long-term investors in the coin. That doesn't mean that there is no retail interest, however, because so-called shrimps, those holding less than one Bitcoin, have been topping up their investments. Glassnode calculates that these smaller accounts have added something like 60,500 coins in the last month, which it called one of the most aggressive accumulation rates in Bitcoin history, and there are now 42.3 million addresses on the network that contain some fraction of a Bitcoin. At the other end of the spectrum, the activity of institutional crypto traders is becoming more noticeable. $64 million were pumped into digital assets between June 27th and July 1st, according to data from CoinShares' weekly fund flows report. 80% of that money found its way into short Bitcoin funds, however. Most of the new cash, $46 million to be precise, came from the US, but institutional investors from Brazil, Canada, Germany, and Switzerland put $20 million to work in digital assets. Away from the Bitcoin funds, Ether picked up an investment of just under $5 million, its second consecutive week of positive money flows, according to the CoinShares data. Institutions are partnering up to create new digital trading platforms. Fidelity Investments, Charles Schwab, and Sequoia Capital are said to be co-funding the creation of a new digital market-making venture in collaboration with Virtue Financial and Citadel Securities, two of the most active high-frequency trading firms, or HFTs, in the U.S. However, rather than relying on existing technology used in equity or futures trading, the institutions are building these new products from the ground up. Officials at the European Central Bank, or ECB, are laying the groundwork for the harmonization of regulations around crypto trading and investing, reports the Financial Times. The move follows a vote by the European Parliament and the EU Commission to bring crypto issuers and service providers under their regulatory umbrella using a new framework known as MiCA, or Markets in Crypto Assets. The ECB wants to make sure there are no duplications or loopholes within the new rules that will be built up and implemented over the next 2 or 3 years, which will also include an 18-month review period for items such as the role of NFTs.